Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 7th of October. All right, now, just coming to you a little later than probably usual. We do have a holiday in Australia and China, bank holiday today. So just starting the update today, the start of the European session, which is probably a better thing anyway, with a few things rolling out. Now, so just understand normal market liquidity. There were a few sort of minor little gaps. You may not have noticed it, but just with the Australian-China holiday, and also if you come over and have a look at the general news, there's a lot of geopolitical crap sort of sitting around, okay? At the end, safe haven trade starting to come back into play with dollar yen drifting lower last week. Caution over the US-China trade talks. The German industrial orders have just come out, I'd say about half an hour ago, 50 minutes ago, slightly weaker. We did see Euro sort of blip down about 15 or 20 points, and then it's back to where it started. But just goes to show you that the markets at the moment are reacting very closely to the data. So just bear that in mind. There could be a few short-term trading opportunities around. That's where we are. Like the data from last week, US non-farm payrolls. Now let me just sort of come back into that. It was a bit of a funny one. Just a much better rate, unemployment rate, and if I just get that up, for some reason my flags aren't turning up, which is not going to be exactly helpful. So just coming back into those US numbers now, for those traders who sort of aren't right up the curve here, the non-farm payrolls themselves were, slightly weaker than expected. The unemployment rate almost at a 50-year low, right? If anything, that's to me alarm bells, especially the way the economy is going at the moment. But the two big negatives were the average earnings month on month and year on year, right? Slightly weaker than expected. And that really put a sour note. So you got like a bit of a bearish number on the payrolls, bearish numbers on the earnings, but a really strong unemployment rate. It's a little bit iffy to me, but we saw the US dollar, as you can see, the dollar index here, just sort of drifting lower, no major variables. And here's this gap today with these US-China trade talks. This is dollar yuan, or the offshore yuan. It's gapped at well over 100 points there on the open. That's what was sort of just, the Aussie and Kiwi didn't really react to it, which you would expect them to, but they haven't really kicked in. So a few little odd things there. So when you come back to the analysis, and I'll show you the charts in just a second, we are looking at a bit of a mixed picture, right? The hourly trend for the US dollar, really diffused with that sort of slightly weaker non-farm payrolls data. If anything, it's mixed, but to me, slightly negative. And this is where it gets a little bit tricky. You've got dollar yen drifting lower. You've got dollar CAD going higher. Okay, these dollar pairs, usually they would be doing the same thing. Obviously, the US-China trade talks putting a bit of a sour note on dollar yen. And dollar Swiss sort of back into a sideways movement, but, it is sort of still breaking higher. Now, this is where it gets a little bit sort of odd, right? You've got the underneath the dollar pairs at the top there, you've got the Euro, Sterling, and Aussie and Kiwi. Now, on the weeklies, right, on the longer term charts, these currencies are all going down. But on the short term, they are sort of going up. And if anything, to me, on the daily trends, they're going sideways. So a little bit of a tricky one to play out. If anything, I'm waiting for the two bottom pairs, because we've got this clear central bank sentiment there, waiting for those to top out or get closer towards resistance for a potential opportunity there to get short Aussie and Kiwi. But it's really going to depend on the dollar. Now, as we come through the week, it's not very hard to work out where the main action is going to be. Now, I know Powell is talking today, but he's actually just talking at the premiere of a movie, right? So don't get yourself all excited there. So starting really Tuesday, US PPI, and we do have the Fed chairman speaking. That'll be closely sort of watched. Then if you come into Wednesday, it's really going to be the FOMC minutes. And that's what the markets, and I expect a lot of commentary to focus on. But the real crux of the week is Thursday, and it's got everything we need, okay? In particular, well, it starts with the UK GDP, and the Bank of England Governor Carney speaking afterwards. But the ECB monetary policy accounts. This is going to be key to the next move in Euro. I'd suspect we're going to see some, or get more evidence there, hopefully, of the state of the EU and what they're thinking of doing. But the real big focus for me is going to be the US CPI numbers, right? This is the core number that will drive the Fed to either do nothing with rates or cut rates. So that's what we're really looking for. And then you've got the Canadian employment numbers come Friday, a bit of a wham bam, thank you, ma'am, explosive number to finish the week. And the prelim University of Michigan consumer sentiment numbers there as well. So really, start planning your week. I know it's only Monday. It's a bit of a slow start, obviously, with a couple of the centres on holidays in Asia. But, you know, Thursday's going to be the focus. You're looking for opportunities coming in through Tuesday and Wednesday to give you a little bit of a buffer to really hit the market hard with those Thursday numbers. Now, we've still got those Trump impeachments. It's still pushing along. Brexit obviously getting closer. The countdown is really on, with 31st of October being the current deadline. And obviously the US-China sort of getting back to talk. So I am expecting a little bit of carnage from these. So don't fall in love with your positions just yet. We really need to see some evidence before we start, you know, cheering and jumping up and down. And we've got to trend and hold positions for longer than a day or two. All right. So just coming into the currencies, let me just bring you across to the charts here. Now, I've just blown these out a bit. That doesn't probably give you a really good perspective. So what I'll do is I'll just shrink them back down. Here's the Aussie. It has climbed off the floor after the RBA interest rate cut the other day. If I just shrivel these up, get a better idea of what's going on. Euro back in the range. Sterling starting to trade sideways. So this is where we are. So you've got the Aussie. I mean, it does have a long-term downtrend. Let me just make that a little bit thicker. Downtrend at the moment, to me, this is a bit more sideways. If anything, we're coming back to really good levels to get short. But what we're looking for is a little bit more of a fundamental driver behind us so you can feel confident to get into position. And that's pretty much the same with the Kiwi, sideways at the moment. And we're back to that resistance trend line. Here's dollar yen sort of cruising to the downside as those US-China trade talks start. Euro really got itself up off the floor. And I'm thinking back towards 110. I know we've got resistance here just below that. But it's got to be a good level to get short, doesn't it? I'd love for those ECB monetary policy meeting accounts to be today because it would give us a bit more of a look. Sterling, well, it's been cruising to the downside, but the last week just sideways. And dollar CAD, well, oil's back at $53. That was pretty short-lived, that whole move there. So to me, you know what? Dollar CAD has just been, it's one of those currency pairs that really does, when it goes, it runs, especially if the US and the Canadian data sort of are opposite because you get that sort of big move. And then once it reaches like the next level, it just sits there, right? And this thing has been grinding away for most of last week. So to me, what's it going to do? Well, it's sort of on the way up, but doesn't look like it wants to go anywhere from here at the moment. And this is why you've got to come back, always consider the upcoming fundamentals. And when you're looking at dollar CAD, right, we're going to wait till Friday before we get the chunky employment numbers, right? So there it is. That's how I see the charts and the analysis for today. As I said, we've got a little bit of time to wait. We've got a big week. And this is, I love the US CPI like a hell of a lot more than the US non-farm payrolls because it's one number, right? The US employment numbers, there's about 6 or 7 numbers. This is one number. We get a result and then we trade, right? So this is our gravy, right? So if you're not sure about what to look for, or if you're uncertain which one you're going to focus on this. This is where the action is going to be. All right, guys, that's it for me. Bit of a weekly wrap there as well as a bit of an update for today. Everything's back on deck. We'll keep you in touch as we go. Cheerio.